And I call it a billionaire's government because Trump himself is a billionaire. You have Elon Musk, you have John Paulson, you have Scott Bessent, and there are many people who are supporting it from outside, the guys like Bill Ackman. So all of these guys are actually true blue free marketer capitalists, right? So how does this government actually work in a way which effectively leads to betterment of the American middle class? I think that's the key question that we have to see and how it evolves over a period of time. The end result, we still don't know, but the policies that this government is going to follow or this administration is going to follow, the tax policies, the trade policies, the deregulation and the overall sort of immigration stance, I think those key areas are very clear. But how does that translate into providing a better life for an average American? I think that remains to be seen.
The US elections have delivered a decisive mandate in favor of the Republican Party. Donald Trump and the Republican Party have come to power as the president in the Senate, and most likely even the House is going the Republican way. The Trump campaign promised some very significant shifts in the US policy. These policies are likely to have a major impact not only on the US but also on the global and Indian economy. Joining me to discuss these issues today is Neeraj Gambhir. Neeraj is the Group Executive and Head of Treasury and Wholesale Banking Products at Axis Bank. Neeraj, welcome to the show.
Pleasure.
Let's first start a little bit with the economic landscape of the world, where we are and what's happening in the context of which these elections have happened, and then we can talk about what the implications are.
Yeah, so we are in 2024, 4 years after the COVID pandemic hit us. And during the COVID pandemic, in order to support the economic activity, almost all governments undertook a major fiscal expansion and economic support programs. What that did was, as the COVID receded, as the pandemic receded, the world was again hit by the inflation shock, which kind of was not anticipated. Right now, we are all dealing with the aftermath of COVID. The inflation has subsided significantly across the world. It is returning back to the pre-COVID normals, but the impact on individuals and their spending power is still pretty significant, right? There's also left most of the developed world governments with substantial fiscal deficits, which have been proving to be very difficult to control. So that's the kind of broad economic background within which this historic US election has taken place.
Great. And so now the results of this election were quite stark. They were unlike maybe the last 2 or 3 elections where the elections were quite close. The Senate went one way, the President went the other way, or the House went the other way, etc., etc. So it is a very clear mandate. Now, what does that signify? What is the context of the US in which this election results have come out, and what does that signify?
So it's a big red sweep. I think it's completely, in some senses, it's a complete contrast to what most of the polls were predicting. Most of the analysts were writing about it's going to be a razor's edge. There's going to be a very, sort of neck-to-neck election between the two parties and between the two candidates. But clearly the US electorate has swung in a big way, and there has been a big Republican sweep across the entire US in terms of the vote share, in terms of how they have polled. And there was this question about whether the 7 swing states, which way will they go, all of them have gone Republican. If you look at, so Donald Trump has come into this with not just a significant electoral college votes, but also significant popular votes. So it's basically a consistent vote in that sense. The Senate was expected to go Republican, so it has done that, although the majority is a bit slim. But the important thing is that the House is also looks like it is going to swing Republican. So what that basically means is that Donald Trump in Trump 2.0 has the benefit of not just electoral college votes, but also popular vote. And also he has control over the Congress, US Congress. That basically gives him a tremendous ability to sort of form the kind of policies and shape the US the way he would like to, as against when he was in Trump 1.0. So there's a stark difference between Trump 1.0 to Trump 2.0. in the sense this mandate has been given to him.
Right. And all mandates mean something, right? Like people will interpret the mandates in certain way. So what is this mandate and what's the context?
So Trump has come into this this role. The presidency has been given to him, and his campaign promises have been very, very clear.
Right.
He has talked about 3 or 4 things which have kind of touched a chord with the U.S. electorate, which is number one, he wants to focus on trade and tariffs.
Right.
I think he basically is make America great again. He's premised on the fact that he wants to bring a lot of the jobs back into America, a lot of production back into America, create jobs for the Americans. So that's his plank number one, right? His plank number two is taxes. He has promised significant tax cuts, particularly for the corporate sector, but also on small things like tips that you give at the restaurants or social security benefits that you get. So there is a very significant focus on tax cuts that he's promised to U.S. electorates. A third thing that he's talked about is deregulation. I think there is a growing feeling that U.S. Policy has become, in some senses, anti-business, in some senses very restrictive, and the compliance burden is huge. So effectively, he's talking about deregulation, which basically means that bringing some kind of animal spirits back into the U.S. Corporate sector. And fourth, and very, very important and significant, is the immigration aspect of it, right? U.S. has been receiving a lot of immigrants. By some counts, there are about 20 million immigrants right now in U.S. But he's talked about sort of deporting these guys back in a massive immigration overhaul and immigration change. So these are, if I would say, 4 key pillars of Trump's policy on which he's come back to power again. And this policies basically are designed in some senses to help the U.S. middle class get back its incomes and get back their income growth. I think the notable thing in the context of this election is that while U.S. as an economy has been doing very, very well, it's grown fairly well in the last decade after the great financial crisis, the income inequality within U.S. is actually significantly grown. So while the top end of the population, the top earners in U.S. Have actually gained significantly and their incomes have grown significantly, the middle and the bottom part of the U.S. population has actually seen income stagnation in the nominal terms. And as the inflation has hit their wallets, the real incomes, the real disposable incomes have actually been going down. So this has been a source of a big angst in U.S. and which is reflected in the way the mandate has been given to Trump. If I were to summarize this, it's basically a big shift that the U.S. population is asking for, a big shift from the existing policies of the Democratic government, and Trump has promised the same. One more thing that I would like to add here is that in the context of developed world, you could think of this as a trend that is evolving across the world, right? In some senses, there is a very strong anti-incumbency factor that is at play here, which has been seen in almost every other developed economy, whether it is Japan, where the ruling LDP has lost their mandate. It's in France, where the Macron has lost the parliamentary majority. We are seeing some aspect of this in German politics play out, where German ruling coalition has lost their mandate. So effectively, there is some sort of a right shift, anti-incumbency way, you could say, is playing out in the Western world. Not only it's also, in some senses, there in U.S. election mandate.
So Neeraj, great. So essentially, what we just discussed is that the context of the US is that US has obviously done very well since the global financial crisis. But in this time, the differential between what the middle class has gone through versus what the quote-unquote elites have witnessed is quite different. And perhaps the middle classes, given inflation and so on and so forth, actually their real incomes may have actually dropped. And so they are now feeling the pinch. And that is demonstrating in this overwhelming support for Trump and the Republican Party because they promised a number of things which hopefully will make life better for the middle class Americans. One question I wanted to ask here is that if you look at the folks who are backing Trump and also many of the names that are doing the rounds, for the cabinet. Many of these are actually very successful businessmen. They are the quote-unquote billionaires, right? So, and very likely they will push for, more business-friendly policies and policies that will likely further exacerbate this phenomenon. So, how does that stack up, and what's...
Yeah, so that's the what for want of a better word, inherent sort of contradiction in this mandate is that the plank for Trump and Republicans is Make America Great Again, which basically means make American middle class great again, and improve their standards of living and improve their overall social status. But reality is that the government is actually most likely going to be, and we still need to see who the main players in the Trump's administration are. But there is a considerable influence of billionaires, and I call it a billionaires government because Trump himself is a billionaire. You have Elon Musk, you have John Paulson, you have Scott Bessent, and there are many people who are supporting it from outside. The guys like Bill Ackman. So all of these guys are actually true blue free marketeer capitalists, right? So how does this government actually work in a way which effectively leads to betterment of the American middle class? I think that's the key question that we have to see, and how it evolves over a period of time. The end result, we still don't know, but the policies that this government is going to follow, or this administration is going to follow, is very clearly laid out. I mean, this is the 4 or 5 things that I talked about earlier: the tax policies, the trade policies, the deregulation, and the overall sort of immigration stance. I think those key areas are very, very clear. But how does that translate into providing a better life for an average American? I think that remains to be seen.
Great. So, Neeraj, let's dive a little bit deeper into the 5 areas you mentioned. So, we spoke about tariffs, taxes, immigration, regulation, and also towards the end, maybe let's talk a little bit about the relationship between the government and the Fed, because that's also an important dynamic. Why don't we start with tariffs? And so what's the promise, and what do you think happens if that promise comes through, and what is your sense of, will the promise come through at all?
So before I delve into those 4 areas in tariffs, I think I would also like to say that while we had this issue with high inflation, we are currently at a point in time in US economy where inflation has already come down quite significantly.
Right.
We are already at a stage where this has happened despite Fed running a very tight monetary policy. There hasn't been much of a growth sacrifice in US, right? So US economy still continues to do very well. And the unemployment numbers are at all-time low, right? It's still 4.1% unemployment. So effectively, it's a kind of a Goldilocks scenario at this point in time for US economy in the context of where we are starting from, right? So on tariffs, I think the Trump's plank is very clear that he wants to basically, bring production, bring manufacturing back into America, create jobs for Americans. And he wants a lot of American companies who have been producing outside to actually look at producing within America for consumption in America. I think that's the main thought process. So one starting point to think about tariffs is what has happened to US current account deficit over a period of time. Currently, the US current account deficit is almost $1 trillion, a little short of $1 trillion. And it has actually expanded from somewhere close to $500 billion to $1 trillion over the last, I would say, about 5 or 6 years, right? So there is a significant change in the deficit. And if you look at the countries with which this deficit has grown significantly, the top of the charts is China. But besides China, I think US also is running a significant trade deficit with Europe, with Japan. Within Europe, it's between Germany and I think Italy, which contribute the largest amount of deficit. And then you have countries like Mexico, Vietnam, India is maybe 5th or 6th in that charts, and Canada. So one way to think about this is that if eventually what Trump wants to do is the balancing of the US current account, then he should systematically go after those countries where US is running the largest current account deficit and basically try and bring some balance back into the trade equation. He has publicly spoken about imposing 60% tariff on China, and he has also publicly spoken about 20% import tariff on all imports into US. Most of the people believe that this is a starting point. This is a negotiation tactic. At the end of the day, Trump is a deal maker. He's a transactional deal maker, so he will basically go into this on a very country-by-country basis to work out deals which eventually benefit America. So he's going to think about this from a pure American perspective. As a result of that, you could see significant impact on the global supply chains. Also, it could potentially be somewhat inflationary for US economy, because once the imports start getting tariffed, the cost of goods arriving in US will increase, and therefore there is going to be some kind of an inflationary impact of this. What happens to the production shift to US from other countries? I think that's a more longer term story. One of the main insiders of Trump, current sort of team, Scott Bessent, who's pipped for US Treasury Secretary's post, has actually talked about tariffs being layered, in the sense that it's not going to be one shot, you impose 20% or 60% tariffs, but you over a period of time build tariff walls. Whatever way Trump government goes about it, and that will basically evolve over the next 6 to 12 months time frame, it is for sure that we are going to be seeing a far more protectionist trade policies from America. And there is likely to be retaliation on this from the America's trading partners. In this context, as I mentioned, that India is probably 6th or 7th in terms of the current account deficit that US is running with. We are at about $45 billion of US current account deficit with us. So I think there will be some conversation with India as well. And we need to see in this play how does the India-US relationship actually plays out from trade perspective, right? In one of his speeches, he's also talked about India, and he's pointed out the amount of levy that we charge, the customs duty that we charge on imported cars. So whether there is going to be give or take on some of these goods versus what US is importing from India, and US is actually a big consumer of Indian goods, whether it is and services. A lot of services export happens to US. So I think there is going to be some redrawing of these things as time plays by. And as a result of this, you will also see some realignment in global supply chains, right? People who are currently producing in China, while they may not be able to significantly move away from China because there is a lot of dependence there, it's not very easy to shift these supply chains in a short period of time, but incremental capacity creation could actually shift to countries which are considered to be, from a tariff perspective, friendly with US, right? So if India plays it well, I think we could be one of those countries where you could see some shift of production happen from other places.
Sure. Now, Neeraj, this also has second, third order implications, right? Like when the US starts becoming quote unquote protectionist by applying tariffs and so on and so forth, the rest of the world will also, there'll be some changes there. So what happens there, and how do you see this evolving?
I think, yes, everybody can turn a little bit more protectionist than they have been in the past. And global free trade, the story that started from early 2000 with the formation of WTO. Remember, the predecessor of WTO was GATT. GATT evolved into WTO, World Trade Organization. China got inducted into WTO. You had a huge sort of opening up of trade everywhere in the world. We are seeing obviously a pullback from that situation. We are also seeing a very strong nationalistic thinking process in the government's mindset. And everybody is thinking, what is in it for me, right? So I do feel that is likely to gain pace over the next few years as the Trump government sort of pushes forward with its tariff strategy and tariff policy on trade. There is a huge amount of dependence today as far as the supply chains are concerned, right? So when America is importing, let me just take an example. If America is importing, for example, textiles from India, it's not as if America is exporting cotton and that is converted into textiles in India and sent back to America.
Right.
What's happening is that cotton is being grown in India,
right,
that is converted into textiles, and America needs clothing. So that's their dependence on us, right? And similarly, dependence on Bangladesh and some of the other countries, right? Can this substantially change just because you have a tariff walls now? Answer is no. It will take years for these things to evolve and change over a period of time. American producers or American farmers have to start growing cotton for it to change. So I think in the short run or in the medium run, what you will see is redrawing of the supply chains between the countries, relative shift of this between the countries, but interdependence amongst the countries for production is not likely to change anytime soon, right? That will stay. So world trade might see some kind of impact of this. More production coming into US means less trade globally. But I think it's much more about redrawing of the supply chains than an absolute reduction in the world trade. One notable thing in this is that over a period of last, I think, 10, 15 years, US, which was a large importer of energy, crude oil, gas, etc., has become self-sufficient, right? So it's a big change that their dependence on the rest of the world has actually reduced, or Gulf has reduced. But that doesn't mean that the trade has actually substantially reduced, right?
So moving on to the second topic, which is taxes. What are Trump's policies on promises on taxes, and how are they likely to pay out?
So in 2016, when Trump came into power, one of the big things that he did was reduction of corporate tax rates and individual tax rates. I think that change that he brought in is due to expire next year. And he has to, basically it is given that will be rolled over. So that's one. Second is that he has also talked about bringing down the corporate tax rates to 15%. I think currently about 21% or so. So there is a significant corporate tax rate cut, which he's talked about. He's also talked about reduction in taxes on some of the smaller things like tips that you give or the income that you earn on Social Security. So there's a whole host of tax cuts that he's talked about. The challenge with this issue is that these tax cuts, and there are some estimates out there who talk about a total increase of about $7.5 US trillion on fiscal over the next decade between now and 2034 because of the Trump's tax plan. So it's actually a fairly significant tax cut that Trump is talking about. Obviously, it is going to be beneficial for the corporate sector, which is why you've seen equities do very, very well in US post the Trump election, right? So the belief is that this level of tax cuts is going to be positive for the corporate sector, for corporate earnings. And while the US equity rally was limited to, let's say, big tech stocks or fabulous 7, now it is actually spreading out to more mid-cap and small-cap stocks. So I think there is an expectation that this will actually play out and this will help widening the growth in US in a meaningful way.
So the as you said, the tax cuts that are being spoken about are very meaningful, which means that they will negatively impact the revenue of the US government.
Right.
And US is already running a very large deficit, right? It's upwards of $30 trillion.
No. US fiscal deficit is currently 1.8.
Absolutely. Sorry, I correct myself. The debt of the US, which is not fiscal deficit, but debt which has been accumulated over time, is now upwards of $30 trillion. And as you said, likely another $8 trillion will be added to it over the next 10 years. So, if the revenues drop so dramatically, is there some plan to manage the deficit, let's say by cutting costs or something? Or
so they've talked about tariffs as being somewhat compensatory.
Sure.
Because tariffs will mean better income for US government. But the size of the cuts versus the size of the impact of tariffs, I think they're quite disproportionate at this point in time. So the expectation is that the US tax proposals under Trump will add meaningfully to US fiscal deficit, right? And again, just for the historical context, pre-COVID, US used to have about 4.5% fiscal deficit as a percentage of GDP. That number went all the way up to 14% in the wake of COVID. Last year, in 2024, September 2024, US fiscal year ends in September 2024, the deficit was roughly 6.5% of GDP, right? So by any stretch of imagination, US is running a fairly large fiscal deficit, has been running a fairly large fiscal deficit over the last many years. And as you mentioned, as a result of that, the total outstanding debt as a percentage of GDP has ballooned. In notional terms, it is about $31 trillion. And US is adding about $1 trillion every year, or somewhere between $1 to $2 trillion every year to that. I mean, $1.8 trillion of deficit means that they have to borrow $1.8 trillion, so that adds to the debt. So the debt is getting accumulated at a very fast pace. And if you ask me, in the current context, if there is one significant concern that economic commentators and markets have about US, it is the size of US fiscal deficit and the size of US debt. That's clearly a concern area which the markets are talking about. And in fact, in some commentators' mind, in some ways, with the kind of sweep that he has gotten, both in popular vote and in Congress, there is no real check, right? He's got pretty much the entire U.S. government and the U.S. Congress with him. He can do pretty much what he wants. The only real check on his ability to do what he wants is the market, right? The bond market. And we have seen bond market sell off significantly over the last 5 or 6 weeks. The US bond yields have gone up by roughly 60 basis points ever since the market has started pricing in the chances of Trump victory. So clearly, fisc, an impact on US borrowing, impact on US debt is the front and center of markets thinking at this point in time. There are some estimates which say that if Trump were to follow through with all of his tax proposals, in about 10 years' time, US debt will be about 150% of their GDP, which is actually a very, very large number.
Right. So a couple of things there, Neeraj. One is that just in the run-up to the elections, some of Trump's closest advisors spoke about, short-term hardships, cuts to Medicaid, rollback of or reform of the Obamacare program, and so on and so forth. And in general, Republicans have been a, cut government spending kind of a party. So you see something happening there, or?
No, so I mean, just a couple of days before the elections, Elon Musk talked about $2 trillion reduction in the fiscal deficit, right? I mean, just think about this. The US has a total spending program of almost $6.5 trillion. The total earnings that they have from taxes and everything else is about $4 trillion. So the deficit is the difference between the two. And if you were to dive deeper into where this $6.5 trillion goes, almost $1.8 trillion is spent on Social Security. Another $1.8 trillion is spent on Obamacare and Medicaid. And there is roughly $1 trillion which is being spent on defense. And $1 trillion, I'm just giving you very broad numbers, $1 trillion is spent on interest payments. Now, when Elon Musk or Trump supporters talk about $2 trillion reduction in US fiscal deficit, essentially they're talking about wiping out the full deficit, right? 1.8 versus 2. But it is not very clear where is that is going to come from, right? Any attempt to reduce the size of Social Security programs or Obamacare is likely to prove to be very, very unpopular, right? So the only way you can actually cut, and therefore it's not very clear as to how much you can cut, is that if you bring down the size of the government, right? You bring more efficiencies in the government. And on the Medicare, Medicaid side, you talk about more efficient procurement, right? You negotiate the contract with Big Pharma and basically reduce the cost at which the medicines are being bought. Will that together add up to $2 trillion? It's very difficult to see at this point in time. So you will need to see how this evolves. Therefore, the impact of tax cuts is here and now, right? In an already stretched fisc, which is running fairly large deficit, and the promise of $2 trillion reduction in the government spending is not very clear, which is why the market continues to be very concerned about fisc.
Sure. So moving on to the other point on this, which is we saw in the UK when the Liz Truss government came up with some policies which significantly would have impacted, increased the UK's deficit. The market reacted, I would say, quite violently, and actually that resulted in the government itself being very, very short-lived. So A, if you can throw some light on that event, and B, do you see, I mean, something of that sort may not happen in the US, it's a very different economy, but do you see some kind of a reaction?
So Liz Truss moment, as it is called in bond markets, is basically UK bond market reacting extremely negatively to the tax cut proposals that Liz Truss government had come up with. You remember there was a very short-lived Liz Truss government. Liz Truss as the Prime Minister, she had come up with this budget proposals. It did not go down well at all with the markets. It was largely unfunded tax cuts, significant expansion of UK's fiscal deficit, very violent reaction in the market. Yields went up quite significantly, and that started having a big impact on UK's financial system. Can US go through a similar by the way, UK went through a Rachel Reeves moment as well. Rachel Reeves is the current finance minister, and when she unveiled the budget recently, the UK bond markets again reacted somewhat negatively. And although the size of the move was not as big as during the time of Liz Truss, but still the markets did react. Can US markets do what happened in US during Liz Truss time? I think there is a risk, and that's the risk which the market is worried about. But the difference between US and UK is that US dollar is the reserve currency in the world, right? So in some senses, US has this printing press, and world is very happy to buy US dollars because they think it is considered to be a reserve currency. That's the benefit that pound did not have. Can US take this world reserve currency status for granted? For now, maybe yes, because there is really no alternative. But over a longer period of time, there is bound to be issues, right? Which is why Trump victory was announced, and when the results were out, that day US bond markets actually moved by 20 basis points in a single day. Not a Liz Truss moment, but nevertheless,
it is fairly significant.
It is a fairly significant move in here. And actually, ever since the market has started thinking about the possibility of Trump coming back, right from, I think, end September, the US bond yields have gone up by 60 basis points since then. Now, you can argue whether that 60 basis point move is worry about fiscal deficit, or worry about higher supply of US treasuries, or pricing in of better US growth because of Trump's policies, and hence the need for Fed to cut rates being repriced in the market, right? So market is also thinking that if US economy does well and Trump's policies are inflationary, Fed may not be able to do as many cuts as they have kind of currently priced in. So it's a mix of all this, but fisc concern is certainly at the back of the mind.
Sure. So the one pushback against Trump's policies could, because as you said, the Senate, the House, the President, which is the entire government apparatus, is all Republican, which means that they can pretty much do whatever they think is right. The one potential pushback will come from the market, particularly bond market, where we could see some movement in yields to kind of bring some more control over what's happening. Let's move on to the next one, which is immigration. Immigration has obviously been a hot topic, and so Trump has promised a lot. So what are big things there that you see happening?
Well, I think they've very publicly called out the fact that they will deport people back.
Right.
They will deport illegal immigrants back. There is a lot of history of this in the U.S. Policy making. I think Trump talked about immigration in his previous presidency as well. Do you remember he talked about building a border wall with Mexico and stuff like that, which never got done, by the way. But what Joe Biden's administration did was it actually immigration, or in some senses illegal immigration, was not really pushed back against, right? So US did see a significant amount of influx of immigrants, particularly from the South. And what Trump is now calling out is to say that policy is not likely to continue. Or in fact, he would like to reverse that policy.
Right.
Which basically means that if there are immigrants in US, which there are a lot, who are illegally there, he would like to send them back. And now the estimates vary. Some people have actually gone to the extent of saying that the total amount of illegal immigration in US is of the order of 20 million people, right? That's a very, very large number.
Right.
So what is required? I mean, if Trump were to actually follow through with his campaign promises, a very large-scale operation is required to haul up these people, put them back on, put them in some kind of detention camps and then transport them back, into their respective countries. And a big government apparatus is required to do this, right? But clearly, one of his first appointments right now is a guy who has been former director of U.S. immigration, Tom Homan, who has been a noted immigration hawk. So I think, and he called him a border czar. So it's very clear that with these kind of steps, he wants to follow through with his campaign promises. In fact, it is also expected that by the time Trump is inaugurated, which is in January 2025, very quickly some of the immigration policies will follow through, right? What impact does this have on US? I think Remember, a lot of low-end jobs in the US are done by immigrants. Your restaurant jobs, your, store clerks in the departmental stores, etc., etc. And therefore, you could argue that because US has so much immigration, it has kept some kind of a lid on its wage prices. So the question is that if you do such mass-scale immigration, what impact does that have on labor costs for small and medium-sized businesses? If you're running a restaurant, you could hire cheap labor to run, to help you in the kitchen or in servicing. But if that is not available, then does it not increase your cost? So that's one aspect that needs to be sort of thought through. The second aspect of this is that if you remove so many people, you're also destroying demand. So what does that do to you, to your overall demand situation in the country? And is that positive for the economy or negative for the economy? The Trump administration, the current people who are actually thinking about this have argued that US spends a lot of money in managing these immigrants. Right? So a lot of money is being spent in, this morning I was hearing an interview by Tom Homan, the guy who's now being called as the border czar, that they're spending $500 a night in keeping immigrants in US hotels. So the argument is that yes, while there will be a spend to do this entire operation, the government will indeed save a lot of money in what it is spending on the upkeep of these immigrants or maintenance of the immigration policy. So we need to see how this plays out, but this is going to be a very significant part of Trump administration.
And this, so if you kind of look at the previous things, which is the taxes, actually the taxes and the cost cuts impact the middle class negatively, right? Because it kind of further exacerbates the delta. But the immigration policies are likely what is going to impact the middle class maybe positively, because that results in an increase in the real wage costs and, creates more job opportunities, etc. And so this may be one of those policies that,
Yeah, I mean, you could argue that, effectively more jobs go the American way.
Right.
And if cheap labor is not available, which immigrants were supplying, then the wage cost or the labor cost is going to go up. And therefore, it lifts the standards of living for the lower end of the American population, right? And to the extent that there is a negative effect on the corporate sector, who's the employer, you are basically offsetting it by lower tax rates, and therefore there is a balancing effect coming here somewhere between the two policies, right? But that's the theory. I mean, nobody has done the numbers. I have not seen if there's a hard number to say that if you deport, say, 10 million immigrants out, what is the net impact on wage cost and what is the net impact on corporate sector profitability. I think some of these things will play out over a period of time,
right.
And we'll learn whether this is net positive or net negative for both the middle class and the corporate sector.
Right. And obviously, Neeraj, in all of this, we are not talking about the human cost at all, which is a separate consideration.
Yeah, this is pure economic calculus.
Correct,
we are not. We're just talking about cold numbers here.
Correct.
There is the humanitarian aspect of deporting so many immigrants, and how do you deal with that is completely different.
Yeah, absolutely. Moving on to regulation. Again, another area that the Trump team has talked a lot about. I think there is a strong belief that, like one of the tweets said that at this time we need more creators than critics. And there is a strong belief that there is, regulation has gone overboard, etc. So what do you see kind of happening there?
I think there are 2-3 areas of regulation which will be focused. The first and foremost is digital assets and crypto coins, right? So this has been one area which has come under significant pressure during Biden administration. And the current SEC chair, has taken a very kind of counter digital asset stance, which is why Trump has publicly gone in support of cryptocurrencies. Elon Musk, as we all know, has had a long affiliation with this. So all in all, I think it is basically seen that the Trump administration and their policies will be supportive of cryptocurrencies and digital assets, which is why you've seen Bitcoin price move up so sharply. I think today it's about $89,000. So that's one aspect that, as far as deregulation is concerned, we'll see. The second aspect is there is, under Biden administration, the Federal Trade Commission, which looks after the big M&E and big corporate entities and antitrust sort of activity, has been pretty hawkish, right? So big businesses have come under a lot of constraints. M&A has not been as easy. So it is expected that there will be more liberalization, more sort of deregulation there in that space. So ability of America or American corporates to continue to become larger and continue to consolidate through M&A will actually significantly improve. And that is expected to unleash some kind of animal spirits in corporate sector there. So this again is a second area of deregulation that will be watched out for. The third area of deregulation is, specifically with regard to healthcare, right? Where I think again the person who's likely to be entrusted with the healthcare administration, which is Robert Kennedy, who actually was also presidential candidate, but later on withdrew from the presidential race in favor of Trump, is reducing the size of government as far as healthcare is concerned. He's promised to cut the NHS, National Health Service, size quite significantly to start off with. I would like to add a fourth one as well, which is the financial services. In US, regulation on financial services industry, particularly large banks, has actually moved quite significantly since the global financial crisis. And big banks have, been subject to a lot of tight regulation. So it is expected that in some senses, financial services industry, small regional banks will also benefit a lot from this attempt to deregulate. A similar thing was seen during Trump 1.0. I mean, Trump 1.0 was also a lot more favorable towards deregulation, and particularly in the financial services sector, which is where the SVB crisis, came through. So I think these are some of the main areas of deregulation which we will be watching out for. And therefore, what will be extremely crucial is to see who are the people who man these important areas. So, for example, who becomes the next Treasury Secretary, who becomes the next FTC chair, who becomes the next SEC chair. These positions will be occupied by, if these positions are occupied by people who identify with Trump's philosophy, we could see a lot of changes in the policy making.
Right. Last couple of minutes on the the Fed and, relationship with the government.
I think if you ask me, amongst all the things, of course, there are very thorny areas like immigration, but from an economic standpoint, the relationship between Fed and the government or the administration or White House is one of the most important areas that we will watch out for, right? Historically, all US administrations, all US presidents have respected Fed's independence. I think one of the reasons why US dollar has become a global reserve currency over a period of time, trusted by a lot many people, is because US Fed has managed to keep inflation low. It has pursued independent policies irrespective of the government, and it has generally been, its policies and its monetary policy making has generally been very objective from economic standpoint, right? Case in point is that currently US government is running a very large fiscal deficit. Any other part of the world, you would see pressure on the central bank to help support the size of the fiscal deficit. But Fed is currently undergoing what is called quantitative tightening, which basically means that it is selling government bonds from its own portfolio while the government is also issuing government bonds. So really, its policy in some senses is independent of what's happening on the fisc. Now, Trump has publicly spoken about Jerome Powell, the current FOMC chair. Jerome Powell has publicly spoken about the fact that he will not step down,
right,
if Trump were to say so, because the law does not require him to. So that's a story that I think will play out over a period of time. In any case, in 2026, when the current Fed chair's term ends, we'll have to see what happens. In all likelihood, Trump would like to appoint somebody who's more amenable to his way of thinking. But if Trump were to somehow undermine Fed's independence, which, as I said, has been a hallmark of U.S. economic policy making, I think it will create some issues for U.S. economy and U.S. policy making. Large fiscal deficit, lack of an independent central bank, it's a very, very potent combination for things to go awry. So I'll really watch out for something like that.
Right. And just if we take all the individuals out of the equation in a situation where the
inflation, while it has come down, it is still not yet at the levels that the Fed would like to be, and the government is likely on a path where the deficit is going to widen. Plus, growth continues to be strong. The central bank typically would keep interest rates high and not cut it. So there is a real kind of scope for conflict here.
That's right. I mean, Fed had started cutting rate even though growth was okay, employment still near record lows, and inflation sort of in the right trajectory where they wanted to be. So they had the confidence that inflation over time will come to the levels that they wanted to. So clearly, it is a very, as it was called, some kind of a no landing scenario for US. I mean, a very Goldilocks kind of a situation for US. But the reason why Fed started cutting rates was because they did not want this to change. They basically wanted to make sure that unemployment. Remember, Fed has a dual mandate.
Correct.
They have to worry about inflation and they have to worry about unemployment.
Yep.
I think the early start to rate cutting cycle and rate cutting cycle in a bigger step of 50 basis points was all essentially to make sure that the no landing or the soft landing that they have achieved, it does not get compromised and you don't come into a situation of where interest rates in US become very, very tight. Policy is very tight, so it was more of a normalization of the policy. But if the fiscal policies and some of the tariff kind of situations lead to higher inflation, better US growth, then it's quite likely that Fed may not follow through with the kind of rate cuts that the markets are currently pricing in. Fed has already done 75 basis points of rate cut. There is a 25 basis point rate cut expected in December. And then the market is thinking about another 100 basis points of rate cuts into the next year, right? So while December seems to be near certainty at this point in time, but whether Fed will follow through with the next year's rate cuts, given the outcome of some of these policies, I think remains to be seen. And that could become a contentious point between White House and Fed, that if Fed says that growth is good, inflation is not looking that good, we don't want to cut, and Trump wants them to cut, that could be a point of contention between the two, which is where the issue would be.
Sure. Great. So just to kind of summarize all of this from implications on the US perspective, definitely we are looking at higher deficits. We are looking at higher tariffs. Now, whether that's 60 or whatever else, we don't know, but for sure there is going to be higher tariffs, lower taxes, a more, closed economy from an immigration perspective, and more deregulated. What is a little bit of a question mark is whether all of this is a net positive for growth or a net negative growth. Because there are positive factors like the tax cuts, etc. Obviously, help from the corporate sector perspective. Tariff increases perhaps bring down demand because pricing goes up. Immigration likely to be net negative for growth because demand goes down. But deregulation could again be positive and so on. So maybe the implication on growth is not that clear, but implication on deficits quite clear, and it's going to be.
Yeah, I mean, I think if you look at the market's summary of this, which is why it's basically good for growth. Inflation not very clear. There are positives and there are negatives, which may balance out. Certainly concerns on fiscal and the impact on fiscal. And also, strong dollar, because if the growth is good and inflation kind of stays here or maybe a little higher, and the fiscal deficit is managed, then very net positive and which is what is getting reflected in the way US dollar is trading.
Right.
There are a few other things that we need to keep in mind. If I may just add, Trump has also talked about flooding the market with oil.
Right.
Drill, baby, drill. This very well-known comment. So if Trump does drill a lot of oil, and there is a lot of oil production that happens in US, and he floods the global markets with oil, it's going to be negative for commodities.
Right.
And that is where I think the impact on countries like India will also be need to be seen. I think lower oil prices is certainly a good outcome for us in the country. So impact on US economy certainly, but impact on global economy can also be equally significant by all of this.
Right. So moving on to the last section, Neeraj, which is we've focused entirely on the US, but all of this, what does it mean for India?
Yeah.
And so, how should we think about this?
So I think it's I mean, US the way Trump administration is likely to think about all of this is from their own lens. Right? It's what's good for America. That's why the tagline, Make America Great Again, right? So it's MAGA. And what's good for America may not necessarily be good for America's allies and America's trading partners. So the real question is that how does this negotiation happen? How does this entire deal making come through as to what's good for America and what it means for the rest of the world? I already mentioned two things that we talked about. One is the tariffs, right? It's not as if India will be not affected by it, given the fact that we are also running about $45 billion trade surplus with US. There will be some impact on tariffs, but it needs to be seen how we negotiate that out, right? It could also potentially mean that as importing from China becomes more expensive, some new production capacity starts shifting to countries like India, Vietnam, Bangladesh, or some of these, other countries. Impact of immigration, well, US is a very large Indian immigrant population, but it feels like at this point in time, though nobody has clearly mentioned it, but the bigger target here is immigration from Mexico.
Right. And the illegal immigrants, right?
The illegal immigrants which are there in US. So it's more about sealing the border with South. It's more about, immigrants coming from that side of the world. So far, it doesn't feel like that it is going to impact Indian immigrant community in any meaningful way. If anything, I think Vivek Ramaswamy is a part of his internal set of people. So I think Indian diaspora there is very well set in that sense. Finally, the impact on some of the side effects of, for example, what I talked about, that if we actually indeed floods the world markets with crude, it's good for us, right? So I think from an Indian perspective, one thing which I missed out is the impact of higher bond yields. So if the markets do take the bond yields higher because the fisc in US is going to be expansionary and that's not going to be liked by the market, higher bond yields have an impact all over the world,
right,
including India. In general, it basically means lesser flow of capital to emerging markets. So I do feel that that's one area that can be potentially quite negative from our perspective. And we've seen rupee under pressure of late in general because of outflows from equity markets. There is an opportunity, but there are also likely to be negative impacts on countries like India as a result of these policies. A lot of this is basically what Trump has said and promised in his campaign trail, right? We'll have to see over the next 6 to 12 months how what all was mentioned during election campaign, how much of that translates into policy and in what form and fashion it takes. I think there's still a lot of uncertainty about it, but really it's a question of how do they execute it.
Great. Thanks, Dheeraj. Fantastic conversation. So we spoke about that in the context of the global economy where generally inflation has been high. We are coming off a high inflation world. Government deficits are high across the world. The income inequality has increased quite significantly and populations are aging. And in that context, the American public has basically brought in the Trump administration with the clear mandate seems to be to make, quote unquote, make America great again and make American middle class great again. And so a lot of the promises were focused around that. And the areas that Trump has spoken about and his team has spoken about are increasing in tariffs so that the production moves more to the US, reduction in taxes, better control on immigration, some cost controls, government spend, etc., deregulation. These are the 4 or 5 major themes that they've spoken about. There is a theme around how the relationship of the Fed and the government plays through, given that they will likely have contrary objectives in mind, is another thing to be looked out for. In general, the belief is that this will be good for growth. It will be good. It will be positive for growth. It will widen the deficit reasonably significantly. There is going to be higher tariffs, and hence there's a trade environment around the world. It may not completely get derailed, but we should see trade getting headwinds coming into the kind of the trade
and redrawing of
supply chains. And the implication of this for India, as you said, it's in the nitty-gritties. You can't kind of draw mega implications, but India has an opportunity that if supply chains move from China, can we get them into India? India-US ties are very strong. Immigration will continue to be strong because that's not the focus of the government. At the same time, India could see higher tariffs on exports that India is doing. So that's something to watch out for. And finally, the one macro theme, which is if the bond yields do go up in the US, that likely could negatively impact the Indian financial system because India would have to follow suit, and we will see lesser inflow of capital because capital will go to the US. So that's a broad summary of this, Neeraj. Thanks a lot for sharing out time, and I hope you liked the conversation.
Yeah, it was a great conversation.
Thank you.
Thank you.
Thank you for listening into this episode of Open Dialogue. I hope you enjoyed this as much as we've enjoyed bringing it to you. We are overwhelmed by the response that we've received and really look forward to your comments and feedback. Do like and subscribe to our channel to keep track of new episodes that are coming through. Thank you.